Hi everyone and welcome to our interest rate update for July 2015. I'm here with Rob Gilmour. So tell us about the decision today, Rob.
Yeah, thanks Aaron. Well, people weren't expecting too many surprises from the Reserve Bank today and they certainly lived up to that. The rates have been left on hold at 2%, and really the Reserve Bank was bringing out similar themes from previous statements, and they're very much on a wait and see approach, I believe.
Yeah, sure. There's no real surprises there. So we've come to the end of a financial year. How did everything stack up?
Yeah, look, it's always good to look back on a financial year that was, and the story's pretty good. I mean, all major asset classes over the last year actually have increased in value. So that would include bonds, shares, property, and even global equities. So pretty solid performances all round, and what that should translate to is probably your average balanced superannuation fund coming in about 9 to 10% in terms of the returns for the year. So not bad.
Yeah, great. So it's been a solid year. Look, maybe it's time for us to start looking about what's in store in the next 6 months or so. What do you think?
Yeah, well, where do you want me to start?
Well, big one is interest rates. It's always a big one for clients. So why don't we start there? So tell us about what you think about interest rates and what's going to happen.
Yeah, well, look, going on the comments I made earlier, I think the RBA being on a wait-and-see approach, and they're really going to be looking at the economic cycle. And if we don't see a deterioration in economic conditions from here, then it's probably fair to say that we might be at the bottom of that interest rate cycle. So, that's probably a big thing. The RBA views their stance as pretty accommodative at the moment, so the case to cut further is pretty high.
Okay.
But looking forward, when would the next rate rise be? Well, it's going to be lower for longer, I think. Right? Yeah, definitely. So probably not at least until the back end of 2016 on that.
Okay. Look, probably agree. It's a tough one to always pick. Who knows? It changes month on month. What about shares?
Well, look, we've started to see our local share market influenced quite a bit by overseas events, and we're all reading about Greece in the paper. And I think the next big up-and-coming event will be the US increasing interest rates, and that's probably going to create shockwaves across financial markets across the world. But that said, low interest rates are going to continue to be supportive of our share market. People will be watching company earnings very closely, but I think we'll probably see a higher share market from where we are now in about 6 months' time.
Okay. Property market, Sydney's been going crazy. We all know that. We've spoken about it in the last couple of months. Tell me what your thoughts are there.
Yeah, again, look, low interest rates fueling that market, and we've seen massive increases in house prices, particularly in Sydney. And look, it's difficult to see that continuing at the current pace. I mean, it's been pretty crazy. Looking forward, it's also pretty difficult to see house prices having any significant correction or affordability improving, and particularly with the low interest rate environment. But if we do see a decline in the economic conditions, if we do see increases in interest rates, that's probably going to start to take a bit of the heat out of the property market, but also probably what's going on behind the scenes and what the RBA and the regulators are doing in terms of how they influence banks to giving, to restricting credit, and you're probably seeing a lot of that.
Yeah, absolutely. Look, I've spoken before about the tightening of the credit policy in relation to investment loans. It's still happening. It's happening a little bit more month on month. So loans are getting a little bit harder to get. The rates are getting higher when it comes to investment loans. Just in general, that credit policy is tightening quite a bit. So we're yet to see it with owner-occupied loans. We're hoping that it doesn't actually flow through to the owner-occupied market, but we're going to have to keep a close eye on it anyway. So. But so look, let's wrap it up. What do you think's next on the horizon then? Really,
it's end of financial year, so it's tax time.
True.
Not everyone's favourite time, but I suppose it is an opportunity to take stock early and get it sorted out and start planning for the year ahead.
Yeah, true. So well, look, that's our rate update for July 2015. Thanks for having us. We'll see you again next month.